Hi everybody, this is Gary Dean Sentiment Timing, and this is our technical video report for Sunday, December 1st, 2024. I hope you guys are having a fantastic weekend, and let's get started. So, I wasn't doing any trading on Friday. I had an outing that I had to go to, but the S&P closed up 33, and that's after giving up almost 12 points from the highs here where we were at the 60.44, and we came all the way down and closed at the 60.32. So the Bulls are still in full control. It's one of the things that I had mentioned was with the say the new regulations that are going to be in place when Trump takes office, that's making people pretty bullish on things. And I'd really thought that the whole escalation between NATO, Russia, China, I thought that was going to derail things. And obviously, it doesn't matter. I still think you need to run with your eyes wide open on this one, and just take it day by day. Don't try to make any big bets. It's going to be hard to short, but the problem is when if something does happen, there's not going to be any time to get out. It's going to be the S&P could be down 200 points at the open. So that's one of the reasons why I like doing the daily trades that I'm doing. It's not day trading. I'm literally taking a position with the condor or selling premiums on the call or the put side that expire that day, and then the next day I wake up with a clean slate. To me, that's the safest way to do things. Just because like I said, there's elements that are out of our control here. You can't foresee what's going to happen, and so you just want to be cautious. So, um, probably a good way to look at this one is one, two. This is three. We're coming down and making four. This is the 23% retracement at 60.30. If it's going to go to the 38, which would make sense because it's this support right here that would bring us down to the 60.21. Now, if if they keep coming down, obviously 60.14 and 60.06. If it comes down here, that's going to be a lot deeper of a retracement on it, and it would kind of put into question the wave four. But these are the areas you want to keep an eye on. Now, when we look at the 15-minute chart, you can see we kind of have bearish divergences, but I like to see them form like this, more up and then down like that. And here, we had it only caused a little bit of a pullback, and then we started back up. So to me, I would be thinking that if we get this little pullback and brings it down, and now we come up and make new highs, that will give us the bearish divergences. So price support 60.16. This is going to be pretty important for the bulls to defend and the bears to get through because you can see the 50-day moving average is right at 60.15. So this is going to be the battleground right here. If the bears can take it through, then we're looking at a move down to the 59.96 and possibly retracing this entire move here and coming down to the 50.91. Obviously, this 200-day moving average would be a line that people want to watch. But really, if the Bears, their main thing is going to have to be get it below this 59.64 level. If they do that, then that's when we could see some gaps. Now, just taking a look at the upside, here you go, 60-minute chart. You can see we have clear bearish divergences. There's two types of wedges that I'm looking. So one is starting from here to here and going up. And that's looking at, we could see a top of somewhere around that 60-65 level. But there's this other one that fits just as well, where we're hitting actually more tops than on these trend lines. And that is looking for a top to come somewhere right around that 6100. So these would be the two areas that I would keep an eye on. And again, I really the best thing to do is take these trades and close them out, move to cash at the end of the day, and then regroup when the market opens the next day. Because, like I said, holding overnight to me is not really I'm not too comfortable with it just because of the situation that we're in geopolitically. But there's a lot of bullishness out there, and there's a lot of money that's moving out of the say the public, which is the government and states and stuff like that, and into the private, which is businesses, the stock market. So there's a big rotation coming that way, and then on top of that. If there's a risk of any kind of war, typically, especially if it's a world war like three that's pending or on the cusp, money from overseas is going to come here. They're going to seek shelter with the reserve currency, which is now ours. So these are things we just got to keep in mind with it. But as I said, I'm just more I'm more concerned with what's going to happen tomorrow, what's going to happen on Tuesday, and just taking it one day at a time, and not really worrying about if we're heading up to 7,000 or we're going down to 3,000. Just take it each day, make the trades, and then you regroup and do it for the next day. So obviously, I already gave you the upside targets that you want to keep an eye on. Downside, really, this is going to be pretty important. This 6016. If they lose that, that's when we're looking at a move coming down to the 59.95 and possibly down to the 59.80. So let's see what plays out tomorrow. Have a great night and the rest of your weekend, and I will talk to you guys in the morning.